Good evening, everybody. Welcome to tonight's Memorial Library. My name is David. I'm the Technology Instruction Coordinator here at the library. This evening, Keaton Copenhaver is here to talk to you guys about Bitcoin. I will be sending out a survey at the end. If you have any questions, as we go through, kind of save it towards the end. I do have some paper if you want, just kind of signal me and I'll give you a pen and paper, kind of write down your question and we'll come back to it. So here's Keaton.
Well, thank you guys for all coming tonight. Thank you. Like David said, I'm Keaton Copenhaver, and I'm going to be talking to you tonight about Bitcoin. So just a quick kind of poll: who has heard of Bitcoin before they saw it on the announcement? Wow. Okay. Have you just kind of heard it in the news, or have you actually kind of looked into it? A little basic stuff. All right. Cool. So basically, first off, a little bit about me. I'm currently a senior this year at Illinois Wesleyan. I just came back today, actually. I'm an economics major and a computer science minor. So for me, Bitcoin is kind of at the sweet spot where my major and my minor kind of come together, and that's really cool. And this semester, I just actually finished up today an article for my senior seminar on Bitcoin and how it's being adopted in different countries around the world. So this is definitely something I'm interested in, and something I really like to talk about, as my family who's here will attest to. So yeah, let's just get started. So this is kind of a definition you'll see lots of places about Bitcoin, but basically what it is a decentralized digital currency created and entirely regulated by its users. So there's a lot of parts to that definition, obviously, so let's break it down a little bit. So what does it mean it's decentralized? This guy does not exist in the Bitcoin economy. There's no treasury that prints Bitcoin or makes Bitcoin. He doesn't exist. It's decentralized, so it's completely, there's no central authority. So then the question is, what's a digital currency? You're used to dollar bills or pesos or whatever you have. It's something you can hold in your hand. With a digital currency, this is literally what it is. It's made up of code that has been written that kind of lays out the rules and says this is what it is. This is how it works, and this is how it will function. So it's nice because anyone can look at this, just like you guys are looking at it now. It's actually available. We can look here. It's online. So this is it. If we go into source and just look at one of these random files. So here it is. This is how Bitcoin works. And while going through it line by line may seem super fun, that's not within the scope of this presentation. So we're not going to do that. But just know that this is what's backing everything that I'm going to be explaining later. So there's the code that everyone can see, and for a lot of people, that makes them feel more comfortable with it. They say, okay, we see this is how it works, we know it's going to function in this predetermined way, and that's a lot of the reason why it's becoming more and more popular, because people like to be able to see that. So is it even real money? Yes. It's currently being exchanged for the dollar as well as the euro, and many other currencies you can exchange it at whatever the exchange rate currently is. It's not a fixed exchange rate, it just floats based on supply and demand. So this is a screenshot that I took last night. We can actually look at it right now and see what's going on. So obviously it's fallen a little bit since last night when I was working on these slides. But you can see one thing about, if you look at the scale on the side here, you can see that it's super volatile in comparison to, for example, the dollar. The dollar is not going to fluctuate 10 or 20 cents on any given day. It's going to be worth about $1. Yes, there is inflation, but it's over a longer period of time. So because Bitcoin is so new and the market is so small compared to the dollar or the euro, that's a large part of the reason why it's so volatile. Why it can go from being over $900 per Bitcoin last night down to $877.30 this evening. So that's one of the downsides we'll talk about later, but it does relate to other currencies, and you can exchange it for other currencies. So this is just kind of a short intro video, which will kind of give you a brief overview of some of the concepts we'll talk about in a minute. So let's just watch it.
What is Bitcoin? Bitcoin is the first decentralized digital currency. Bitcoins are digital coins you can send through the internet. Compared to other alternatives, Bitcoins have a number of advantages. Bitcoins are transferred directly from person to person via the net without going through a bank or clearinghouse. This means that the fees are much lower, you can use them in every country, your account cannot be frozen, and there are no prerequisites or arbitrary limits. Let's look at how it works. Bitcoins are generated all over the internet by anybody running a free application called a Bitcoin miner. Mining requires a certain amount of work for each block of coins. This amount is automatically adjusted by the network such that Bitcoins are always created at a predictable and limited rate. Your Bitcoins are stored in your digital wallet, which might look familiar if you use online banking. When you transfer Bitcoins, an electronic signature is added. After a few minutes, the transaction is verified by a miner and permanently and anonymously stored in the network. The Bitcoin software is completely open source and anybody can review the code. Bitcoin is changing finance the same way the web changed publishing. When everyone has access to a global market, great ideas flourish. Let's look at some examples of how Bitcoins are already used today. You can purchase video games, gifts, books, servers, and alpaca socks. Several currency exchanges exist where you can trade your Bitcoins for dollars, euros, and more. Bitcoins are a great way for small businesses and freelancers to get noticed. It doesn't cost anything to start accepting them, there are no chargebacks or fees, and you'll get additional business from the Bitcoin economy. For your first Bitcoins and more information, visit weusecoins.com.
Okay, so that was a lot. If you haven't really heard about Bitcoin before, that whole thing was a lot to process, but don't worry, we'll go into each part of that in depth. So first of all, the question obviously is, where did Bitcoin come from? How did it start, and why did people just suddenly start deciding that it was valuable? Right? So if you look at the top of any of the pieces of code in the Bitcoin code base, you'll see the very first line, copyright 2009, 2010, Satoshi Nakamoto. So Satoshi Nakamoto basically developed this code and he released it online to a message board of cryptographers and code makers and code breakers. He said, I have this idea for a currency based on cryptography. What do you guys think? Look at the code, see what you think about it, whatever. And so that was 2009, and that's when Bitcoin officially began. So the cryptographers downloaded it, they started mining Bitcoins, which we'll talk about, and they said, okay, this looks good. We can't really find any key flaws in it. There are a couple things we can do to improve it, and they've been improving it ever since. In 2010, Satoshi Nakamoto stopped writing messages, he stopped responding to emails, he didn't answer instant messages, and no one really knows who he is. There are many theories that he is one guy, a mathematician or a really smart cryptographer. There are conspiracy theories that he is a conglomerate of many corporations that if you rearrange the letters in their name, come out to make Satoshi Nakamoto. People suspect the NSA and the CIA, but the long and short of it is that no one knows who he is. This guy or this collective who created this currency that's now being used around the world, no one knows who he is or where he is. And he has a lot of Bitcoin still, and they're only becoming more and more valuable. So it's kind of an important question that up until now no one has been able to answer. No one still knows what it is, who he is. But as they talked about in the video, the number of Bitcoins as they're mined continues to grow. So you can see this is pretty much a steady rate. But the one caveat to that is that it's going to top out at 21 million. So there can never be more than 21 million Bitcoin created, mined, ever. That's a hard limit that's been set in the code to kind of prevent just millions and millions and millions of Bitcoin being created. So why use Bitcoin? Why is it better than the dollar? Why is it better than using a credit card for online purchases? One thing is low transaction fees. To send a Bitcoin from me to you, it would most likely be a free transaction for me to do that. On some large or unusual amount transactions, there is a small fee, which we'll actually look at later to see how that compares. It's something like Western Union if you want to send money internationally or something like that. But it's, again, it's very small, usually around 10 or 20 cents. So yeah.
Keenan, where would one find out the total number of Bitcoin in circulation at any one moment?
Yeah, there's actually, because everything is public and you can see all the transactions that are happening, which we'll talk about later too, we'll actually see, we can go look right now how many, there's a bunch of places online that have that information. So yeah, so we'll get into that a little bit later, but it's all readily available information. So another great thing about Bitcoin is it's nearly instantaneous. So if you want to send money via Western Union, or if you're going to make a bank transfer, it's a couple days, or at least multiple hours, right? So most Bitcoin transactions are confirmed in about 6 minutes. And as more and more people join the network, that time decreases. So I did this probably a couple months ago when I checked this, so it might even be down to 5 minutes and 45 seconds or something like that, because it's continually getting faster and faster, and the network is getting more secure. And because of the structure of how the code is written and how the network is structured, which we'll get into a little bit later as well, you can't counterfeit Bitcoin. To anyone who's looking at it, it might seem like, oh, you're just creating just as many, whatever you want. You can just create false Bitcoin and then put them into the economy. But because of how the network will deal with those coins that you just made yourself, they won't recognize them as legitimate, and they'll reject them. And so you can't, just because of how it's structured, you can't counterfeit, and you can't double spend Bitcoin, which is a problem with other digital currencies, is that I would make 2 transactions at the same time, and I would only have enough currency for one of them. And so those currencies ultimately fell because anyone who was accepting them wasn't sure that they were going to get paid, essentially, because they might have already been spent somewhere else. So there's 2 key problems with other digital currencies that Bitcoin solves really well. So how has the network been growing? We've seen that it's been growing, but how has it been growing? Through people participating in the network and mining Bitcoin, and also through exchanges. So if I want to get into the Bitcoin economy, I can take my $877.30 and go to a currency exchange and say, I want 1 Bitcoin for this $877. And they say, okay, we'll take your dollars and we'll give you a Bitcoin. So just like any other currency exchange, there are currency exchanges online that will transact in dollars and euros and give you Bitcoin. So where does it come from? We've been talking about mining, and what does that actually mean, right? So there are miners out there who, I don't know if this is what they all look like, but this is what some of them maybe look like, who actually spend computer processing time mining Bitcoin, which is creating new coins and ensuring that all the transactions on the network are legitimate, right? So this is a video that probably gives another little high-level overview, but it's good to kind of understand it a little bit.
Reddit knows Mining Bitcoins by Artesian. Mining Bitcoins is like mining a precious mineral, let's say gold, from a single, very deep mine. The Bitcoin mine is the basic protocol that governs the release of the Bitcoins. Think of it like an entire seam of gold running all the way into the earth. The mine is deep and the surrounding rock gets harder and harder to dig through every 10 minutes. At the surface, when people were just starting to crack into the mine, it was easy to have your computer start tapping away at the big seam of gold, mining for Bitcoins by decrypting little bits of code based on the original protocol. Basically, you could walk to the mine and scoop up gold Bitcoins with your hands. Now, Bitcoins weren't very valuable at this point because anyone could just go into the mine and do a little bit of easy mining to get some coins. There wasn't much confidence in their value either. Imagine it's a funny color that people haven't seen before. No government or bank is controlling its price. All that matters is that there were people willing to mine the gold and trade it for stuff, even cash. 25 Bitcoins are released from the code block every 10 minutes, and that's when the mine gets just a little bit harder to dig into. And the protocol dictates that only 21 million Bitcoins must ever exist, the last to be found at the end of the last 10-minute cycle in the year 2140. When the mining got a little bit tougher, and you needed to have a little bit of a better computer to get into the mining business, people saw that there were a few million coins around and the supply was slow to grow, but that it couldn't really be tampered with. The mine was always going to be there. Yes, people could debate what the mineral was worth, they could throw it away or dump it in the ocean or lose the keys to their personal vault, but the mine would be there in the morning, and if you had the right tools, you could keep mining and helping to increase the supply of the coins. Eventually, the people with the pickaxes and the shovels, these were people using their CPUs to mine for Bitcoins by cracking the code in the protocol, just couldn't get any more gold out. Their tools weren't powerful enough to crack through the deepest layers of surrounding rock anymore. In come the GPU miners, people who use the graphics processors in their computers to keep cracking away at the Bitcoin protocol and finding more gold in the mine. They brought powerful motorized diggers, front-end loaders, dump trucks, and excavators. They had the tools to keep mining, and because they often worked in pools and used their powerful tools together, they could pretty reliably mine more gold even as the mine got deeper. They would just split the profits from the coins that they mined. Today, the value of the Bitcoin is much higher than it originally was. People have some decent faith in the value of the gold. A lot of common stores will accept the currency, and a lot of big companies are falling in line to start accepting it. They can see that the gold from the mine isn't really a funny color after all, and that's okay that no big central power controls it. And the more people buy into the Bitcoin market, the more valuable the market becomes.
Cool. So he talked about a lot of important things. One, it gets more difficult to mine Bitcoins over time, which is how it limits this with the supply, basically. So, like he mentioned the 21 million limit, which at that point it will become impossible to mine any more Bitcoin. So that was the same graph we saw in the first video, where it gets easier at the beginning and then more difficult at the end to mine new Bitcoin. And that kind of controls the supply and keeps the market more stable. So he talked about mining using an analogy, which was great, but how does this actually happen? So earlier in the first video, we heard that Bitcoin transactions are organized into blocks, right? So every 10 minutes, there's a new block of transactions that gets recorded in the public ledger. Basically, in the last 10 minutes, these are the transactions that were completed, and we need to verify them, right? So that's the block. This block, basically, when you're mining, you're looking at this block and running what's called a hash function on it. Does anyone, who knows here, has any idea what a hash is? Okay, this is going to be interesting. A hash is basically a way of securing something, but it only goes one way. So if I have a code that I don't want anyone to be able to read, let's say my password to my email, I will run it through a hash function, which is basically a piece of math that encodes it only one way. So think about this. Imagine I say, okay, I added two numbers together, and I got 11,480. What are the two numbers I added together? You have no way of knowing what the two numbers are. They could have been 10,000 and 1,480. They could have been anything. So the two numbers turn out to be 7,648 and 3,832. I can add those together and get 11,480, but anyone looking at it from the other direction can't go the other way. So that's part of what makes Bitcoin secure. So a miner will take the block that they're given and they'll run it through the hash function and get an output. And that output is then compared to the difficulty factor, right? So the block contains transactions and random data, which is what makes it harder to mine. So like I said, they put the transactions into the block and then they hash it. If the hash is less than the difficulty factor, then you win. You found the correct hash, which confirms that block of transactions, right? So you submit that block and you say, here's the hash that I got, bless you. Here's the hash that I got that's valid, and give me my Bitcoins, please. And the network says, okay, that hash is valid given the block that we have, and you get the 25 Bitcoin that is in the next block, right? So basically, this difficulty factor keeps getting smaller and smaller, so it is more and more difficult to find a hash that is less than the difficulty factor, okay? So that's how it gets more difficult over time. And is that making any sense at all? Okay. All right, so, I mean, basically, it's basically kind of like rolling dice. So if you have 5 dice and you know you have to roll the number less than, let's say, 20, okay? You can only, if you roll the dice and you roll 22, sorry. If you roll the dice and you roll 22, that's no good, you have to re-roll. So this is what prevents people from just hijacking the network, is there's no shortcut to roll the dice less than 20. You actually have to physically roll the dice. And so as more and more people are rolling dice and the number's getting lower and lower, people are still going to be rolling less than the number, right? So as the number goes down to say 10, but now we have 100 people rolling dice. Well, the odds that one of those people is going to roll less than 10 is pretty good, right? But the odds that one person is going to be able to roll less than 10 and post a bunch of fraudulent transactions is not very good, right? So as that number gets lower and lower, the network gets more secure because more people are working for it, and one rogue person or one rogue agency working against it has a lower chance of succeeding. So basically, miners secure the blockchain and keep transactions legitimate in exchange for Bitcoins that they receive as a reward, and then they also receive Bitcoin from the transaction fees of the transactions that they verified, right? So if in the last block there were 25 transactions and each one had a fee of, let's say, half a Bitcoin. That's really high, but that just makes the math easy. So that anyone who contributed to securing that block would get 12.5 Bitcoin, and they'd split it up among whoever mined it, right? So that's how mining works. Any questions that we can think of right now based on that idea? Just let it sink in for a minute. It'll get there. So then what? Now I have these Bitcoin that I got as a reward. That's great. What do I do with it, right? What do I do with it besides just letting it sit on my computer? Well, you can take it to an exchange, Bitstamp, BTC, Mt. Gox, or local Bitcoin, which is kind of a different thing, which we'll talk about. And you can say, okay, I don't really want this Bitcoin, I'd rather have dollars. Or I'm taking a trip to Europe and I'd rather have euros. Or whatever you want, and they say, okay, here's the exchange rate, give us your 25 Bitcoin, and we'll give you 25 grand or whatever that's worth. Or you can spend it. So in the video that we saw, you saw some of these. I don't know how many of you guys know WordPress. So if you're gonna make a blog and you need to pay for somewhere to put your blog, you can go to WordPress and say, here you go. Instead of dollars to pay for my blog, I'll give you Bitcoin. Namecheap does domain names. So if you're making a website, you can buy a domain name using that. OkCupid is now taking Bitcoin, as well as Etsy. So if you want to buy craft projects that people have made and put up on Etsy, you can do that with Bitcoin as well as Reddit. So the one thing that you kind of notice is that all of these are pretty much technology, internet-based businesses, right? And we'll talk about why that is a little bit later, but the biggest thing is it's hard right now to accept Bitcoin in the physical world because it's not a physical currency. So that's one kind of issue that people are dealing with right now, is that it's obvious that if I have dollars in my pocket, I can give you dollars and you can give me something else. But it's kind of a weird concept for people to say, okay, I'm giving you something else, but where's the money that I'm getting? It's going to be sent to me over the internet or whatever. Yeah?
Well, where's the biggest online merchant, Amazon, with all this? You would think they would take Bitcoin.
Yeah, that's definitely a thing too. Amazon and other big online merchants like them. One of the big problems is it's still too volatile. Think about it from the perspective of Amazon. If I bought something on Amazon with my Bitcoin yesterday when it was over $900 per Bitcoin, and then today it's down below 880, right? So if you think about it, they still have to do their accounting in dollars, and it's difficult for them to kind of manage that if the exchange rate's fluctuating that much. So the idea is that the number of businesses that accepted it used to be 0. And it's growing, and as it becomes more stable, bigger and bigger businesses will accept it. WordPress is pretty huge. WordPress hosts, I can't think of anything specific right now, but they host a lot of really big websites that require you to actually pay them. So they accept payment for hosting websites that handle millions and millions of users per month. So that was a big win for the Bitcoin economy. But yeah, Amazon is definitely a big one that people have been kind of reaching out to them and asking them, and there's been rumors of them exploring it, but right now still it's kind of too volatile to touch for them, just because of the volume of transactions that they do and stuff like that. Now, if they started accepting it, not 100% of their transactions would be in Bitcoin, obviously, because people still spend dollars, right? But it would still be a major issue for them that they haven't kind of figured out how to resolve yet. Okay, so great. So now we have our Bitcoin and we say we want to make a transaction. So what exactly goes into that? Okay, so do we know these guys? Do you know what these are? So we have Mark Zuckerberg, creator of Facebook, and we have our friend Bill Gates over here. So they want to make a Bitcoin transaction. They say, okay, I like what you're doing with Facebook, Mark. I want to send you some Bitcoin to help you guys out, right? So each of them first have to generate a Bitcoin address, which you can think of kind of as a credit card number in a way, if you have to kind of think of an analogy like that. But basically it's an address that says, okay, if any money that gets sent to this address will go to Mark, or any money that gets sent to this address will go to Bill, right? So they say, okay, we want to do this transaction. But what you need for a transaction is you need input. So where did the Bitcoin come from? How much Bitcoin is going to be involved in this transaction, and where is it going, right? So as an example, here we go. Do we know that guy in the middle? Should by the way? Jeff Bezos, yep, he runs Amazon. This is just a hypothetical, but he's here for this demonstration. So let's say a long time ago, Jeff Bezos sent Mark 10 Bitcoin. So we see this transaction's here. It's already in the public ledger, so it's already visible to everyone. Now, this is just for our example, but names are not associated with Bitcoin addresses because it's an anonymous currency, so we wouldn't actually be able to see that. But in this case, we can. So a long time ago, he sent him 10 Bitcoin, and now Mark Zuckerberg has had that 10 Bitcoin sitting in his wallet, right? And it's in a block. So now, he wants to send 5 Bitcoin to Bill Gates. So he forms a new transaction. He says, okay, I'm going to take this 10 Bitcoin, so that's the input that we talked about, and I want to send 5 to Bill Gates. Here's his address. Okay, great. But you need to work in blocks. So he got that 10 Bitcoin in a block. So what's going to happen is the 5 Bitcoin is going to go through to Bill, but because you need to work in the entire block, he's going to receive 5 Bitcoin from himself, kind of like a change of a transaction, right? So that is kind of a super simple example of how it works when a transaction is actually made. So who keeps track of all these transactions? Yeah, go ahead.
Those wallet numbers show up on the transactions, if you can see on the.
Yes, we will actually see that in a minute, but yes,
when we're
they
all
do.
done, I know what those guys' wallet numbers are, right?
Theoretically, no, because you don't see that this is associated with Mark Zuckerberg. You just see this.
But if you're transferring the money, you know who you're transferring it to.
You do, yes. So if I was transferring it to someone, then yes, I would know their address, and I would know that's them. And they would know it was coming from me, and this is my address. But ideally, you generate new addresses for each transaction. So in that way, it's difficult to link a single transaction to 2 people, right? So again, so who keeps track? There's been some talk of the public ledger and it's stored in the network, right? Who keeps track? So everyone who is participating in this network has or can possess a copy of the blockchain. What is the blockchain? It's just a list. This person sent this person this much Bitcoin at this time. This person sent this, whatever. So it's just a list of every transaction, right? So we can actually see this. So if we go here, so here, this is the blockchain, right? So these up here at the top are blocks that have been mined recently. So this block was mined 14 minutes ago. There were 781 transactions in it, and those transactions total $7.5 million, roughly, in the last block of Bitcoin. So the people who mined it were a member of a group called the Bitcoin Guild. They all pooled all their computing power to mine this block of Bitcoin, and the size of it was 302K, so really pretty small. Down here we can see, literally, these are transactions that are happening right now. So you can see these are kind of refreshing. So here someone sent $138.28 less than 1 minute ago. So we can click on this, and it should. This is the YouTube effect you were talking about earlier. We're talking about how just as I was going to do this, 5 people were going to be out there watching stuff on YouTube. So it's going to be really slow. So here we go. So this is a real concrete example. So here is. So here's the person who's sending the Bitcoin, right? And this is their Bitcoin address, just like we saw in the PowerPoint. They say, okay, I have a block of $138.06 worth of Bitcoin. Let's actually just look at this in. Right? So now we're on Bitcoin instead of dollars. So I have 15 hundredths of a Bitcoin. I want to send 14 hundredths and 67 cents, and then also the 100th, right? So that's broken up into 2 blocks, and then it comes back. So we can see all these different things about what is going on with this transaction. So we have the total input, the total output, and here's the fees. This is what we were talking about earlier. So 0.0001 Bitcoin. Now, if we look at that as something that we can more easily understand, that's 9 cents. So this person essentially sent $130 for 9 cents. Western Union won't let you do that. So that's one of the key things. We don't know if this transaction was international, if it was domestic, if it was to his neighbor, or if it was to someone on the other side of the globe. We don't know, but we do know that there is not really currently existing an agency out there that will let you send that amount of money for that little of a fee, right? So this is every transaction is stored in this blockchain, and we can see here. This is a big one. This person sent almost 22 grand, right? So same thing. So this is a more simple one. There's no, he sent the entire block, right? And let's look at this real quick. So nothing, no fee on sending $21,000, $22,000 essentially.
Is that because it's unconfirmed, or?
Yeah, well, the confirmation is not is part of it, because as blocks are mined, the transactions in the previous blocks get confirmed.
Okay.
But yeah, that's part of it. But again, it just depends. And the fact that he sent it doesn't look like a round number, but he sent an entire block, which is part of the reason why there's no fee. Basically, if you have to divide up the blocks and give change and stuff, the miners take more of a fee for that. But it's totally determined by the market. So if you want to make a really complex transaction and say, I don't want to pay a fee on this, you don't have to. Now it may just sit in the queue forever, and no one will ever confirm it because they want a transaction fee for the work of doing this. But it's your call what you want to do with that. So if you have a transaction that's super important, you need to get it confirmed really quick, just put a higher transaction fee on it, and miners will jump to the front of it and pull it into the front and confirm it, right? So it kind of goes along with the idea of everything is kind of dictated by the market and by the users in this case.
How often is the exchange rate priced? Is it priced real time or daily?
Yeah, well, it's mostly real time. So again, you can see here, so this is one of the exchanges Bitstamp that we talked about before. And doesn't look like there's anything going on right now, but this is usually ticking down with new transactions as they come in, and it says what price these were exchanged for. So someone exchanged 1200ths of a Bitcoin for $8.69 and 10 cents, and someone exchanged 1900ths or 4400ths for $8.70 and 50 cents, right? So you can monitor the exchange rate real time. But it just really depends on what exchange you're using. So this is one exchange, Bitstamp. Another exchange, Mt. Gox, is one we'll talk about in a little bit. But you can see there's a large difference in the exchange rate among the exchanges. Now, Mt. Gox has some problems, like I said, that we'll talk about. But that's one of the reasons is why the exchange rate is so much higher there, is because you can't withdraw U.S. dollars from that exchange. So no one really wants to use it who's in the U.S. because you can't withdraw your dollars, so there's no point. Well, okay, but that's why it's higher. But yeah, so these are all just different exchanges, and they all have different exchange rates based on transactions that are happening in real time. And you can see that because all the transactions are public, right? Which is one of the really cool things. Okay, cool. So we kind of see now how transactions work. So we talked about this a little bit, but where are we actually seeing Bitcoin used in the real world? Okay, anyone know what this is? Does anyone recognize this symbol?
Yeah.
Yeah. So the Silk Road, as it says, is an anonymous marketplace. An anonymous marketplace for basically drugs and other illegal activity. So you've basically given people an anonymous currency, can't really be traced, is over the internet, transactions can happen super quickly. Obviously, for a lot of people that meant it was a great way to fund illegal activities. October of this year, the FBI shut it down. They captured the guy who was supposedly leading the site and organizing it, and they seized all the Bitcoin that was in his wallet. Now, because we've been talking about the security of Bitcoin and all that, it's worthy of note that the FBI has seized his Bitcoin, but they can't get at it. They can't do anything with it. He put a password on his wallet, essentially, and unless they crack the password to his wallet, they can't touch his Bitcoin. They can't sell it, they can't spend it, they can't do anything with it. So while that's not necessarily a good thing, it's encouraging that the protocol is working, right? It's secure and it's functioning like it's intended to. So one of the main points against Bitcoin was, oh, it's not actually being spent anywhere, everyone's just using it on drugs, right? That's what a lot of people used to say. Like I said, the protocol wasn't compromised, and there wasn't really a noticeable impact on the exchange rate, right? So it wasn't like people weren't using it anymore, the transactions went way down. They really didn't. It was kind of just business as usual. So that was really encouraging as well. And it's good to see that Bitcoin is actually being used for other things besides drugs and illegal activity. Okay, who knows who these guys are? Anyone seen The Social Network?
Yeah, what is it?
Those are the
Yes.
two that,
The Winklevoss
Winklevoss
went with
Facebook.
Yes, with Facebook. So they claim to have developed the idea of Facebook and asked Mark Zuckerberg to help them code it, and then they claim that he stole the idea, ran off with it, built his own company, and whatnot. So that was kind of their claim to fame, and recently they decided to get involved with Bitcoin. So they are part of the investors who are in Bitcoin. So basically they're trying to create an ETF which would allow an exchange-traded fund, which would allow people to buy and sell Bitcoin on the stock market, basically, which you can't do right now. And that's another one of the things that we'll talk about is it's getting easier every day, but up until now it's been very difficult to actually get your hands on Bitcoin without mining it yourself, right? But what they want to do is they say, okay, we've invested in this Bitcoin. A while ago it was priced at about 10 million, the amount of Bitcoin they were holding, but since I'm sure it's gone up. But they're currently dealing with the SEC, who is not quite sure what they want to do about that, whether they want to allow Bitcoin to be traded on the stock market, and how they would exactly have that work. But basically, as far as investors go, you have speculators who just say, okay, this is cool, might be worth something someday, I'll just buy some and I'll hold on to it, and I won't really spend it or use it or whatever. I just want to have it in case it's valuable someday. And then there are currency traders who are actually getting into it now as it's becoming more valuable. And it's actually sometimes possible to do arbitrage based on, you saw the different exchange rates at different exchanges, so you can buy on one exchange and wait for the exchange rate to swing one way and then sell on another exchange and make a profit on that. It's not super easy or super intuitive, but it can be done, and people are doing it. They're also using Bitcoin where they would normally trade just between the dollar and the euro. Now they're kind of have a triangle between the dollar and the euro and Bitcoin or whatever. So it's interesting to see how it's being used in place of other currencies where the people involved are used to dealing with technology anyway. So a lot of currency traders, when they're trading dollars, they're just trading dollars on a computer. So Bitcoin to them is not that much different than just sending dollars on a computer, sending Bitcoin on a computer, right? So another way Bitcoin is being used is through an organization called Sean's Outpost. It's homeless outreach in Pensacola, and it's really interesting because it's kind of the first project that's been taken on like this. It provides meals to the homeless, and it's run entirely on Bitcoin donations. So a lot of charities are starting to adopt this as a way to kind of get a more global reach. And it's been really interesting. Sean has been really active in the Bitcoin community, which has helped. He's helped work on various things, but he's also been running Sean's Outpost, and they've been actually doing very, very well. So that's been really encouraging to see as well. And the final kind of use case is really where Bitcoin shines over other kind of currencies in this area called micropayments, right? So if I want to send $5 to someone over the internet, is it worth it to me to take out my credit card, put in my credit card number, go through all this stuff just to send that small amount of money or whatever? Maybe not. But there are, this is on Reddit, for anyone who doesn't know, which is basically like a message board, kind of going back and forth on various topics. There's this thing on Reddit now called the Bitcoin tip bot, which makes it super easy to send Bitcoin just through a comment. So in this kind of comment, I just took a screenshot. This user right here he's basically sent 15 Bitcoin to Sean's Outpost, right? He basically said like, good luck, hope this can help you out. And the bot came back and said, okay, yep, we verified it. He sent 15 Bitcoin, which at that time was almost $1,800, to Sean's Outpost. And that was it. He didn't have to mess with the credit card or mess with signing in or logging in, whatever. All he had to do was write Bitcoin tip, Sean's Outpost, I want to send 15 Bitcoins, and let me know when it's done, right? And so this is just one kind of use case. You can't do this anywhere. This is kind of a thing that's specific to Reddit, but these are the kind of use cases that, if they're developed, this is what Bitcoin would be really great for. Something like this, where you want to send, granted, this is not really a micropayment in this instance because he sent almost $1,800, but there are other ones where you can send someone, instead of 15 Bitcoin, you can say 1T. I want to send this person 1T, and it sends them like $3.50, So this is really interesting to see this being developed, and if it is in place on different websites, it could be really interesting and a good use case for Bitcoin. Okay, so this is all great, but are there problems with it? Yes, there are problems. It's still a very young technology. It's only been around 4 years now, and there are issues. So, market manipulation. For a long time, Mt. Gox, which we talked about a little bit earlier, was really the only exchange where you could exchange Bitcoin for any other currency. And it basically started, Mt. Gox stands for Magic the Gathering Online Exchange. Magic the Gathering is a trading card game, and the website was built to exchange trading cards over the internet, right? And then they said, okay, this Bitcoin thing kind of looks interesting, we'll try it out. And then Bitcoin kind of started to explode, and they are now handling millions and millions of dollars in transactions every day. That is kind of a hard transition to make, from trading cards, which are worth maybe $10, to serious money, basically. And they didn't do the best job of scaling up their computers and their servers to match all of this volume that they were doing. So it was really easy for someone with a lot of computing power to just make a bunch of really, really small transactions to themselves and basically crash the servers. And since it was the only exchange, when the servers crashed, everyone started panicking and tried to sell their Bitcoin, which drove down the price. And then these people who were attacking the server said, great, we'll buy Bitcoin now that it's really cheap. They stopped attacking the server, everything went back to normal, the price went up, and they sold their Bitcoin, started attacking the server, and drove the price down again. So they were just cycling this Bitcoin and making a profit every time. That's a problem. The fact that there's no agency to regulate it, like the SEC or something similar, basically lets that happen. If someone can do it, there's nothing to stop them, right? So that's a problem. When someone can manipulate the market like that, people aren't going to trust it, and people aren't going to use it. So that's one thing that really needs to be fixed. Exchanges that have been created since Mt. Gox now only runs about a third of the transactions of all Bitcoin transactions, currency exchanges. So that's a step in the right direction, and the exchanges that have been created since then kind of looked at them and said, okay, we need to do better. We can do better, we know how to make better computers and get this working better. Also, we're moving closer to the 21 million coin limit. Right now, I think there are about 12 million in circulation, but the difficulty keeps increasing. So, whereas before you could mine them just with your computer, then people started to need to use their graphics card because it's more suitable to running the hashing algorithm or whatever. Now people get together with 10 of their friends and they say, okay, let's put all 10 of our graphics cards together and run it, and then we can mine faster, and then the difficulty goes up. And now there are specific chips specific to mining Bitcoin that are super efficient for running the algorithm, which is great until it pushes the difficulty higher, right? So it kind of is self-correcting. As the technology gets better, the difficulty increases. And that's great, but there are more and more and more resources being used to mine these fewer and fewer Bitcoin. And that could potentially be a problem. Like why, the question has been raised, why are we continuing to do this when it gets to be super difficult? Yes, there is a financial gain involved, but how could we otherwise use that computing power or whatever? Another thing is government regulation. So governments are starting to take notice now. It's kind of been, it's on their radar. The Senate a couple weeks ago had a couple hearings on it. Basically, they brought in the Secret Service, they brought in the Treasury, the FBI, and said, is this a problem for criminals? They said yes, but we've been stopping criminals who use cash for a long time, and we think we can adapt. So basically, the US at least is leaving it alone for now. China has recently been picking it up as well, but they recently came out and said, nope, you can't do this for any transaction that's not online. So a lot of merchants in China were picking it up and trying to use it in the physical world, and China said no exchanging goods for this, and they recently just are moving closer and closer to kind of a full-out ban on Bitcoin. Now whether that will actually stop Bitcoin in China or it will create just a black market, who knows, we'll see. But governments are starting to take notice. Germany has recognized it as a legitimate currency and said, yep, this is good, you can use this here in Germany instead of the euro if you want, and here's how we're going to tax it and regulate it. A lot of the questions around Bitcoin is how is the government going to react? Do I want to spend all my time kind of gaining this currency if the next week the government's going to come out and say, no, you can't use it, it's worthless, and I'm going to be a criminal for holding on to it. That would not be ideal. So a lot of people who own Bitcoin right now are kind of pressing the government to just make a choice either way. And that's kind of what they're starting to do, which is encouraging. And this is another thing we talked about earlier, is Bitcoins are native to the internet. You can't hold a Bitcoin in your hand and give it to someone, right? So whereas dollars and other currencies are native kind of to the real world, it's hard to bring a digital currency into the real world. And that's going to be the direction it needs to go if it's going to continue to expand past the people who already accept it, with a few key exceptions like Amazon. But that's really a big problem, is how do we get this kind of into the real world and off just being solely used for the internet, right? So those are some key issues. But what's going to be in the future? We're going to have more exchanges, because exchanges keep being created and they keep gaining legitimacy, which means greater decentralization, which means the market will be bigger, it will be less prone to one person taking down the only exchange and crashing the entire market. It'll be more stable and it'll be more secure. As more people get involved, the transactions will get faster, like we talked about before. So, whereas the one advantage that you have with something like a credit card is you don't have to wait 6 minutes or a half an hour or an hour for the transaction to be confirmed. You put in your credit card number, you hit submit, it waits maybe 10 seconds for it to come back, and it says, okay, you're good to go. So if we can get transactions in the Bitcoin network happening at kind of somewhere close to that rate, that would be good as well for kind of an increase in adoption. And more companies are accepting Bitcoin. So like we talked about before, there weren't any companies that accepted it a while ago, a couple years ago, and now we're seeing some pretty big names. So for you personally, if you wanted to get involved with this, how would that work? There are companies now. Here's one, Coinbase, which basically lets you buy and sell Bitcoin using dollars. It's kind of like an exchange, but it's not directly an exchange. They host your wallet on their servers, and basically they say, okay, you can transfer money from your bank account to your wallet and then exchange it for Bitcoins. So it's kind of like a pseudo exchange in that way. They're not directly a currency exchange, but they will let you buy Bitcoin. This is, for me personally, this is how I got the Bitcoin that I currently have, and it was super easy.
This would be Coinbase.com.
Yeah. So if you're interested, it'd be a good place to kind of start learning about it. The other option is, like I said, to go directly to an exchange like Mt. Gox. The problem with Mt. Gox is it's based in Japan, so you have to get your money from your bank account in the United States to a bank account in Japan, which will incur international money transfer fees, which is kind of ironic considering what you're going to be doing with that money once you get it to Japan, but that's a whole other story. So basically then you would make an account directly on the exchange, and you can exchange dollars for Bitcoin back and forth however often you want. This is what currency traders do, and people who need to make a transaction, that split-second transaction, that's what they do. Again, we talked about this earlier, you can put as much money as you want in, but you can't get it out in US dollars. This is part of the issue of Mt. Gox has been really terrible at scaling up, and they have not been as transparent as some of the other exchanges, and I would not encourage you to use Mt. Gox, but this is just an example. Other ones we talked about before, Bitstamp, and BTCE is one of them, but you can also get an account directly on the exchange. Yeah.
So Mt. Gox is Japanese based.
It is, yeah, it's based in Japan.
So in addition to yen, what currencies do they prefer to transact in?
Well, they do accept the dollar and the euro and all major international currencies as well, but
They take
they're
in
a
dollars,
general purpose currency
but will
exchange
not
as
pay
well.
out dollars.
Right, yeah, that's the only thing. Because I don't really know exactly why that is, but they came out and said, we're trying to scale our servers, we're trying to get more powerful, and we were just going to shut down everything for a while. And they did, and no one really knew what was going on. And they came back and they said, okay, we're back open for business again, feel free to transfer money in, we just won't give it back to you. So it's tough. I don't know really why, and it doesn't seem like it's going to be sustainable in the long run. The amount of transactions they do as a percentage of all of the currency exchange that happens in Bitcoin every day is getting smaller and smaller. So as more exchanges pop up, people are saying, yes, this looks like a much better deal. I can put my money in and get it out. why would I stay with Mt. Gox, right? So that's part of the reason why more exchanges is better, because you have more options and other things to do with that.
So can you take money out in euros?
You can take money out in Bitcoin. You can send your Bitcoins to somewhere else,
But
but
they
you
don't
can't
do any currency.
you can't get currency withdrawals, which is a big problem, which is why people aren't really.
So then it's really not an exchange.
Essentially it's a one-way exchange, which is not great for anyone who's
It's basically,
Isn't it an oxymoron,
it's
a
basically
one-way
either
exchange?
some private parties who are thieving people, or it's something set up by the globalists to counter the printing of the dollars in somebody's currency.
And that's one reason why people are switching away from it pretty rapidly, because they're realizing that it's not a very good option. So what do you use Bitcoin for? Again, we talked about all these places that you can spend it, and there's more and more merchants that are accepting it every day. So as that list grows, it'll become a more viable option. Another option is this company called Gift. So Gift is you can buy and send gift cards over the internet essentially. And they now accept Bitcoin. So if I want to spend my Bitcoin on Amazon, for example, I could go on Gift and say, okay, I want to buy an Amazon gift card on Gift, and then I have Amazon dollars basically. So it basically allows you to, again, spend Bitcoin at over 200 retailers. But there's still this kind of intermediate middle step of you have to buy a gift card with your Bitcoin, right? So that's kind of a stumbling block still. But it is a legitimate way you can spend Bitcoin today. You could just do that right now. So that's interesting that they've kind of started to accept Bitcoin as well. And again, you can make person-to-person payments with it. This is kind of the core use of what Bitcoin was created for, to kind of enable this person-to-person payment system. So something like the Reddit tip bot that we looked at earlier, or to replace services like Western Union because of the obviously very, very low fees. And it's much quicker than something like Western Union or a bank account transfer or whatever. So that's one of the key use cases as well. So again, you have Bitcoin, it's a decentralized digital currency and created and entirely regulated by its users. And that's what it is. So now we'll do questions if we have any still outstanding.
So this is like musical chairs when you were in kindergarten, but they're not all in the same room, and they're all over the world.
Essentially.
Somebody stops the music, and somebody loses eventually. Got you.
Yes, potentially. I mean, that's one of the problems with the fact that it's not backed by anything. But the fact that it's growing and it's becoming more and more stable means that it would take a much more coordinated effort of stopping the music. Essentially, one person would be able to say, okay, I'm going to crash the entire market, right?
Okay, so going back when the doctor used to take a chicken for his work, and he
Okay.
what they call that?
Barter.
Barter.
Yeah.
Other than the chicken dying on the way home, he could eat the chicken.
Mm-hmm.
But if I take Bitcoin or Bitcoin and the market deteriorates, I mean, I can take my U.S. dollars and I can take it to the bank, and the bank will take the risk.
Right.
It devalues really badly.
Right. Yeah.
I still got the credits on my account.
Mm-hmm. Well, and that's part of the issue is there's no FDIC, there's none of that right now, and there's not really any agency that's saying yes, we will insure Bitcoin because of how volatile it is, and that's part of what the developers and the people who use it hope to alleviate as the market grows, right? So basically, I mean, if there were only $12 million in the entire U.S. economy, that would be a problem because it would be more volatile than it is today, right? So yes, there is a problem that it could potentially crash completely and people's Bitcoin would be worth nothing. That is a potential problem. But as the market grows, the odds or the chances that will happen get lower and lower, just because more places will accept them and the value will become more stable as it kind of settles. Yeah.
Isn't more stability realized when the population of Bitcoin reaches the max 21 million, so you don't have an expansion of the supply there, and then it becomes just a exchange versus other currencies, and the perception of relative strengths or etc.
Sure. Yeah. I mean, when you look at it from
the second part of the question again is, how do we know how close we are to 21 million?
Sure. Let's actually look. To answer the first part of your question, I mean, when you look at it from an economic perspective, you have the supply side and you have the demand side, right? So even if the supply is constant, you still have the demand can fluctuate based on if people want to use it or what they want to use it for. Let's look at this real quick.
In the middle there, 17 million? Yes.
You should be able to see it here somewhere. Okay, yeah, so here we are. If you look up here at the top, it's a little bigger. So we see total Bitcoin is 12.119 million. So that's the amount that have been mined since the beginning of the Bitcoin economy. And here we can kind of see that difficulty number that we were talking about before. This is where this comes from as well. So yeah, so there is publicly available information there. But yes, so it is supply driven in the fact that the supply is increasing, but it's also demand driven in the fact that the supply of the dollars is increasing and it is still stable or more stable than Bitcoin, right? Theoretically,
more stable.
Yeah. So there are two components to it. So even if the supply is fixed at 21 million, Bitcoin could fall out of favor, or companies could stop accepting it, and then the exchange rate won't be as high, and you could see a rapid devaluation. But it's kind of a balancing act between how fast the supply is growing and how fast the demand is growing or shrinking, right? So, yeah.
The price of the coin's gone from $20 to $1,000 in a year. Do you think that is caused by real supply and demand and real perceived value, or a bunch of speculators?
I think it's more of the latter than the former, right? So this is a 6-month chart of the price. So again, pay attention to the scale on the right-hand side. So we have going all the way back to about June, where it was right around, I believe, $150 to a Bitcoin, and then just right here about the end of October, we started to see this rapid rise. And part of what happens is it's kind of a cycle. So Bitcoin goes up, more people notice, people write articles, and people tell their friends and whatever, and they say, oh, this is kind of cool, let's get some. And it fuels the speculation, it goes up and up and up. And this is a problem because the number of people that are entering the market is more than the market is able to handle. Let's see if it there we go. At any given time. So this is going back 2 years. So beginning of 2012, you were at about, let's say, let's call it $5. And you can kind of see along the way there have been these kind of bubbles. So here's one, right at the end of 2011, it jumped up to $750, which is not huge, but when you consider the price of it, that's 50% increase in a very short time. And then here again in March of 2013, this is there were a lot of issues with Cyprus was going on, and people were saying, well, why don't I switch to a currency that can't be taken from me or whatever. So there was a lot of speculation as to whether people in specifically adverse economic climates, we'll say, which is what I was looking at in my article that I wrote this semester, but whether they will switch to something like this. And people were making a bet that they would. And so they said, okay, this is going to be popular, let's buy some of this. And it shot up. It ended at about $266. And then in the span of one day, it crashed to about 85. That was a really interesting day to watch this chart tick by. The bottom fell out. And that's part of what you're talking about with the fact that it can rapidly devalue. It can, but because the market at that time was a fraction of the size that it is today, and then the market at this time was a fraction of the size of what it was here. So it's both. A lot of it is speculation driven right now, just because the supply is increasing pretty predictably and slowly, but the demand is not. As more people find out about it in the news and whatever, the demand is increasing pretty rapidly, whereas the supply isn't, so it's driving up the price. The question is, where will be the point where it kind of stabilizes? And that's something that no one really knows yet. Yeah.
Okay, I listened to this, it's called ChristianMoney.com.
Okay.
And they talk about it a lot. In fact, he's selling it. And he told us we can buy from Wells Fargo. I can actually go to the bank there and buy some if I wanted to.
Buy Bitcoin at Wells Fargo.
Yes.
Interesting. I have not personally heard of that. I will look into that now. It's kind of surprising to me. Traditional banking institutions have kind of been really fearful of this kind of whole process just because it undermines a lot of what is their core business.
In fact, that's what he said he went to, because when it first started, people were calling him in, talking about it, and he bought a $12 coin.
Mm-hmm.
He had to go through there to get it.
Okay.
And now it's
Yeah.
worth
Yeah, I'll
$9.
have to look at that because I was not aware that was a possibility. But again, that'd be really surprising. But I'll see what I can find out about it. That's cool. All right. Anything else? Are you feeling overwhelmed? To me, it's an interesting experiment just because no one really knows what's going to happen, and nothing kind of on this scale that has not been backed by a central government or central authority has really been tried before. And it would be really, really difficult to do without the power of the internet and the technology that we have today. So,
I see no reason for me to hold those in my possession because I can't use them for anything other than, limited fashion exchanging.
Right.
Dollars, if I go to work somewhere for dollars, I can take them and pay my rent, pay my mortgage, etc. And even though the dollar is not backed up with any gold or any
Sure.
precious
Right.
metals, it's just full faith and credit in the United States government.
Mhm.
But I just can't. And I was thinking, I'd speculate in it, but the speculation
Yeah.
looks too radical.
right. Well, and that's the problem. For people who are going to spend it on servers and domain names and all these technological things, it's great. But for the average person who's not going to buy a website or who's not going to buy a place to put their blog, there is not a whole lot of use for it yet. And that's part of the problem, and that's kind of a barrier that's holding it back a little bit. Is for the average person, there's no compelling use for it. It's just kind of what you're saying, and you can't pay your rent with it, and you can't exchange it for something that you would probably want. You can only exchange it for a very limited amount of goods, which is part of the problem, and that's something that, as more and more companies accept it, that will become less and less of a problem. So, all right. Well, if there are no further questions, thank you for having me. Thanks for coming, guys.